Up until recently, NIO was hesitant to join the price-cutting wars in electric vehicles in China. However, on June 12th, NIO said it will cut prices by 30,000 yuan or $4,200 on all its models. That equates to a 6% to 9% price cut on NIO cars. So with this move, NIO says, you know what? We're no longer letting go of market share and we're going to focus on recapturing market share. So that comes after more than 40 auto brands operating in China, including BYD and Volkswagen, have joined the price war started by Tesla in the fight for market share. And as soon as Tesla announced its first price cut, I was on here saying that this is not good news for EV stock investors because I predicted that more automakers would follow. Automakers and any business is unlikely to allow its competitor to lower prices without reacting to those price cuts with moves of their own. Now, those moves do not have to be price cuts. They could be increase in advertising or other moves aimed at retaliating against its competitor for cutting prices, right? As a business owner, how happy would you be if your competitor cut prices so that they can take more of the market? In other words, take some of your customers. You wouldn't be happy with that, right? You wouldn't just let them and say, oh, well, they're cutting prices, let them have more market share. That's rarely what happens. If one competitor cuts prices, others retaliate, and it leads to a price war, which brings down profit margins industry wide. However, NIO says they're joining the price war and they're focused on that. And in its latest quarterly earnings call, the company highlighted on June 9th that the market competition is intensifying and we do face a lot of changes in the market dynamics. For the NIO Technology Platform 2.0, they're about to show a whole lineup of 8 products, and they're going to employ a more targeted sales strategy and marketing strategy for all 8 products to reach their own target groups. So the challenge for us is to make sure that the marketing and sales team can be more dedicated on these 8 products. And most importantly, the overarching strategy here is they're going to have more dedicated resources and to make sure they can achieve a good market share. A good market share. So when a company highlights that they're going after market share, that's a signal to the market, that's a signal to competitors, look out. We're going after market share. So if you employ more price cuts, we're going to come up with price cuts too, because we want the market share. We're targeting that market share. We're not going to let you have it. We're not going to focus on profitability. We're not going to focus on gross profit margin or operating profit margin. We are focusing on market share. So competition better look out because NIO is coming after market share. It has been the holdout and now it too is coming after it, and the EV price wars are only heating up. So as for investors, for the whole industry, that unfortunately means profit margins will be coming down industry wide, because if they're cutting prices, that means their competitors are cutting prices and the cost of goods sold are only going up, right? Rising cost of materials. And so lower prices, higher costs means lower profit margins. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.